Ladies and gentlemen of the crypto space, we're live on a Friday, April 5th at 11:31. I have to clear my throat already to get things going. 11:31 a.m. on a day after a variety of, or a week of geopolitical complexity, economics from a currency perspective are always on the edge as nation states try and manage their currency and manage their sovereign debt market because there can only be one. They can only favor one. Maybe they try and balance both, but you're either hurting one while supporting the other or vice versa. And this creates all sorts of economic distortions felt worldwide, especially in the scale of what China and Japan do and how they contribute to the global economic landscape, the tapestry of financials and currency. They put significant pressure on the system. Now, China is facing its real estate apocalypse, and they have tried to counter their deflationary pressures as best as possible, but they are basically attempting to export their deflation by pushing for inflation. They want to get out of deflation domestically. They want to inflate, which is an export of deflation relatively. And the experts, the macro folks, are like, is China going to devalue? And the yen, it's a whole other story. So between the two of them, you can look at that data all day long to try and get a sense of what the decisions they're making at a regulatory from a regulatory perspective, what considerations they have from a political perspective, and that's an entire industry. Just looking at the geopolitics of the situation and inspecting nation states, and in some regards that'll drive you nuts. So, can you inspect everything and understand everything? In the end, what I do for myself is I at least try and compartmentalize and fold as much information as I could access and digest into my own framework that I've developed to manage capital for myself. And the purpose of that framework is to have rules, and the rules are so I can maintain sanity because my goal isn't to make as much money as possible. My goal is to respect my rules. I follow my procedures, my policies. I set my expectations very, very reasonably. What is it? Happiness is reality minus, or expectations minus reality, or vice versa. Point being, if you meet your expectations, you're happy. But if you keep setting your expectations higher and higher, and reality doesn't keep up with your expectations, that's pretty shitty. So I focus much more on that. And that's very much more psychological than financial, is I train myself to have reasonable expectations, to not be emotional. And clearly we do have emotions in the backdrop always, but that is the goal. You have to set goals. And my goal is to be in control, to have very reasonable expectations and also rules that are easy to be consistent with, easy to follow and respect. And this allows me to be consistent. And because my goal is merely to be consistent with my rules, technically I meet the vast majority of my expectations. The financial results are merely a knock-on effect of my capacity to follow my own rules. Anywho, so the title of the stream was Business to Business. And there's two types of businesses. You have B2C and B2B. Business to consumer or business to business. Business to consumer, there's plenty of that. There's a lot of credit products and crypto markets and clearly exchanges. It's all consumer. You, me, people transferring all their money from Coinbase over to Base and buying whatever the hell they want to buy for whatever reason. They're a consumer and they're using dollars, and they're stable coins, but they're dollars. They're dollar liabilities, and because of the way the system's structured, those are dollars. And they're choosing to buy things with their dollars, and uh, and that's a consumer product that they're interacting with. Business to business is another story. Business to business is like another protocol where the contracts are engaging with an exchange or a credit facility. So clearly, there's a lot of credit facilities and exchanges that can be B2B, but I don't think we're there yet where contracts are automatically interacting with credit facilities and exchanges. I mean, sure, there's buybacks and there's some things that contracts do that maybe are consistent with B2B, but um, that's not the probably the most interesting thing going on, where that has really been seen and observed since 2021 and the most recent downturn in markets. But I do find the most interesting thing that came out of 2020 and 2021 to be a B2B product that few talk about like I do, and that's capital efficient liquidity financing. And there's a lot of terminologies that get thrown around in crypto markets defining these systems. And it's not that they're juvenile or short sighted, they are reasonable ways to describe these systems, but they're not robust or rich or expansive in perspective. And they call it bribing and they call it incentives. Um, but conceptually, the best way I see from not a professional standpoint, from a rich standpoint to describe it is um, vote rentals. So people rent votes for purposes of financing liquidity. So I call these systems liquidity financing businesses. And that's just my way of compartmentalizing this pretty, you know, obvious sector of crypto markets at this point. And there's a variety of protocols that fit these characteristics that are implemented in a variety of different ways for that matter. But there's only a couple of ways. There's really only two broad ways that these liquidity incentive businesses have been built over the years. And very specifically, it's the original voter escrow design from Mitch at Curve. And a lot of protocols still use that. And it's like that's a Camelot type design and obviously a Curve design and what Balancer and Aura do. Uh, and there's iteration on that for as far as the eye can see. And probably the most iteration done from a base voter escrow perspective is Balancer and Aura. And they're missing a variety of observations that we've made over the years as what's needed, particularly recycling and sterilization to get rid of excess supply. And they've compensated for that by mutating monetary policy and adjusting things very aggressively. Their governance is very proactive at attempting to iterate on base VE tokenomics. And then Andre came along at the end of 21 with Solidly V1, which was an absolute financial catastrophe, to say the least. But it all started with his documentation. Now, I was excited for his launch, and it was only amplified by the amount of capital that tried the front run, and it was billions of dollars. That's how much capital was thrown around at the time. But my interest started with his documentation, just words on paper, which is conceptual. It's forward-looking, and expressed innovative ideas about compartmentalization of incentives, separation of incentives for the liquidity providers versus the voters, and the total encapsulation of the stack that we really saw emerge in the Curve Federation. So it requires a federation what Curve built. It needs the sterilizers. And a sterilizer really was started with convex. And they took excess supply and they used their own monetary policy to finance disruption of Curve circulating supply, the deficit spending, and that's what emissions are. And, and these are the best ways to describe it because these are real financial terms. Deficit spending, they're diluting their currency, they're inflating their supply, and clearly it's disinflation, and that's extraordinary and interesting to say the least. But these are the terminologies used to best describe these systems in a very professional and specific and granular way. So the whole federation was needed to do what eventually came about for original voter escrow design. You needed these third parties to become large sinks, large absorbers of excess supply, which sterilizes them in the open market, and they're permalocked, permanently locked, which means they can't be sold, which means they can't affect circulating supply. And that is akin to what the petrodollar achieved for many years. The nation state analogy I always come back to understand these systems and why they are merely an extension of financials as we know them in the real world. And then Andre wanted to encapsulate all of that stack, that whole federated stack of protocols, into a single implementation. And when I read his documentation, I saw that. And I'm pretty sure, I think he said that in his documentation. And he clearly referenced all that was built and all that emerged in the Curve Federation. And that's clearly the guiding light for what worked. And it was working back then, as much as everyone was so dissatisfied with the hyperinflationary decay at the price point prior to the emergence of convex. We saw the price action, and now we've seen since then the explosion of sterilizers disrupting circulating supply. And Andre saw that, and he wanted to iterate on that model. And obviously, his launch didn't achieve what he envisioned on paper. But what has occurred since then, it's been years, years in the making. And a couple of different protocols have traction. And it's very early stage. I mean, Velodrome at what, 150 mil market cap is very early stage traction into something that is big. It's just as big as the Curve Federation, and it deals with a very different consumer. Both are business to business, but I see V33 design as a different type of business as the consumer. Small scale, venture capital, not even venture capital, seed, early stage, get off the ground. How do you get off the ground? And traditional voter escrow is very much centered around an established organization that has financing and has a capacity to deploy capital, and they want to deploy it in such a way to have a history of data to speculate on the results. And also there's marketing and branding that comes along with their capex. They're spending money on what? Oh, Curve or the federated protocols. So that is more palatable, more established, acceptable as compared to what is just getting off the ground. Whereas smaller protocols can throw around 10 bucks, 20 bucks, 100 bucks on one of the VE33 protocols and have an effect and have a meaningful effect and being able to start building the liquidity depth for their asset that is literally the purpose of these systems and a required goal for any business that wants to start in the crypto space. And by business, I mean protocol. And by protocol, I mean token. It's so much more rich than saying just token. These are businesses, and what is the product and what is the service? And that is the required perspective to start to have to really understand these systems and not just look at them from the most shallow of perspectives. So there's such a plethora of V33 protocols, and at one point it was one of the most forked protocols ever. Few have traction. And the easiest way to see what has traction is you go over the volumes on DeFi Llama. And we're not going to go through the list, but go through the chains. It's not going to be on mainnet. Um, albeit mainnet does have, I mean, there's nothing really on mainnet. I mean, Solidity is up there on mainnet. That's pretty interesting. All right, fine. Solidity does have its presence on mainnet. It does have its presence on Phantom. Um, so that is just observable. It is nothing to sneeze at to be number 7 in this micro emerging market. Ethereum mainnet is a microscopic emerging market from the world's perspective, and that's meaningful. So I am the last. I am I don't diminish success. In fact, I see success in everything, and maybe that's a curse rather than a blessing, but I'm generally optimistic and I generally think from a good perspective. So that's quite extraordinary. And where things head, how things play out is always speculative. So you could go down the list to see what's interesting, but obviously Velodrome has the most traction because of first mover advantage. I did a post about this just a couple of moments ago in response to Nick. He said, "What are the reasons you attribute for the difference to the difference? All three are well-known names, and investors have had ample opportunity to analyze each." Yes. So I've had a lot of responses to this. This is one of my most interacted with posts in quite some time. Very high level inspection. Um, I mean, you could literally block out this paragraph and just post this, and then people could do their own due diligence and assessment and rationale to try and understand what it means. And I contributed a statement as to what it means to me. Fundamentally the same technology. That basically means they're an inception of Andre's design. So broadly, either they are an optimized implementation of Solidly, or they're at least capable of minor modifications uh, to tweak the protocol from a monetary policy perspective to just further enhance. And I think obviously with collaboration, choices can be made on how to make those modifications based on what has been working. And clearly, Velodrome has been working very well from a revenue standpoint to vote for vote renters as well as LPers. The incentives have a very different alignment on these protocols as compared to uh, you know base voter escrow tokenomics. Anywho, so Aerodrome obviously caught the base pill, and base got frothy. Base. So back in 2020, mainnet was frothy. Then Binance Smart Chain came along, and it got frothy. So this time around, Solana was frothy. It was the froth. And then Solana rotated to base. Mainnet's expensive nowadays. Back in 2020, mainnet was pennies, 20 cents, 50 cents, a dollar, $2. Early 2020, it wasn't expensive to interact with mainnet. It got expensive mid to late 2020, but there was a great period of time where Ethereum mainnet was dirt cheap to interact with. I mean, at this point, you could probably compare it to like Avalanche or Polygon type fees, which are relatively expensive now compared to Ethereum L2 fees, which is quite fascinating. Um, so the base bid is one part of the inspection to understand this discrepancy. And then, I make statements based on my rationale, and I see base. It's all meme coins. And there's nothing wrong with meme coins. You can have the philosophical conversation all you want, but I look for businesses. I want to own businesses. So what businesses are there? There's nothing on base. If anything, it's Aerodrome. Aerodrome is the center of the universe on base. And of course it's going to outperform. It's the only business investment possible on base. So, and then comes to mind something like, is it at a premium or is it at a discount? Well, it's at a premium. Oh, that's very good if you bought base at 8 cents or you got the airdrop. That's cool. That doesn't mean everyone should crowd into the only business on base. Because what happens is when you crowd into the only business, you buy at $2 and it's at a buck 38. And you're speculating where it goes from here. So does more billions of dollars fall in from Coinbase? Probably yes. Does the froth continue? Probably, but there's plenty of catalyst for froth to rotate, given that there's many markets for the froth to rotate to. So now you think in terms of odds. What's the odds that froth continues on base? Or what's the odds that a spark happens on another chain in another market that starts to garner attention? Always remember that capital flows from underperformance to outperformance. What goes up continues to go up until it stops going up. Well, at some point, one of these ups will start to go down. And that's thus far what has occurred on March 27th. So that's about a week and a half, give or take. We're heading into week two. 7, yeah, heading into week two. And these are relatively short-term time frames, so it's not something that could be stated with certainty. But that's a top. At least it's a local top. And if billions keep coming in, I mean, you need a lot of money to move a $500 million market cap asset. And in a market with $1.4 billion, I believe, Base has, uh, there's a fair amount of cash to do it, but that means all that cash needs to concentrate into a single asset. Um, and in that regard, I don't want to crowd into an asset. Great. It goes to a billion. It goes to 5 billion. It's a 10x on the money. A 10x on the money is something you want to invest in, especially look at these folks, look at these numbers. $17. Let's look at the buys. $16. Well, it looks like DCA. So maybe $800 buy. An $800 buy goes to 10x on the money. One, 5 bill market cap would be extraordinary. And 8 grand from $800, yeah, that could be quite meaningful. Uh, but is that the expectation? Is the expectation for an extraordinary market cap to be achieved, uh, and the net result is 10x on the money? It's probably, I would define that as unreasonable expectations for myself in crypto market terms. I don't want to expect it to go to 5 billion. That is a massive, massive number. Is it probably meant to go there into the future? Sure. But I would like to see more robust fintech infrastructure, fintech businesses emerge on base. I would like to see capital flow off base. Then I would like to see capital flow to base. And all these types of flows are very consistent with saying a healthy market function where capital is flowing everywhere. And over time, asset prices appreciate. But the expectation should be that capital will flow out and then flow back. And there's a lot of probability that suggests that the hot ball of money rotates somewhere else, just like Solana, with 75% of transactions failing because it's congested, will probably encourage capital to flow to other chains. Now, Solana has a fair amount of capital on it. Solana, from a stablecoin perspective, has $3 billion, which is still chasing Arbitrum. Arbitrum is trailing Binance Smart Chain. That's about it. Arbitrum has $3.4 billion. That is a lot of billions of dollars. So what does logic say? If a lot of people are having transaction failure, there's too much activity in the network, sure, the network can improve, but isn't that a potential catalyst for capital to rotate to a chain that is less congested or more capable of handling the volume that has underperformed thus far? And as capital rotates, the what has underperformed that starts to outperform. And what's outperforming, you see the 50% rip, the 100% rip, and then all of a sudden capital keeps coming in because it goes up, up, and up. And that is literally what happened with Aerodrome. And then you get the divergence to the upside. You go from a discount to a premium, and it can happen really quickly. So I don't want to buy something that has already ripped. And what I want to do is buy things that are at a discount, that are not seen, that are mispriced. And that's where I diversify because all you need is a couple of highly mispriced assets to get really frothy to reprice to the upside. And that's not how you do 10x. That's how you do the 100x. That's how you do more. Meme coins are another ballpark. That's not something that I talk about too much. That's all social media inspection and assessing, just trends of communications and messaging and branding and that's it's a different wheelhouse. I'm older and I want to invest in businesses. And guess what? The businesses are going to capitalize on those social expressions of memes. Where does all the transaction volume go through? It goes through these exchanges. So great. You get 100x on an exchange that's cranking out 20, 30% on the money, and that changes everything. 100x on 10 grand is $1 million, and you crank it out 10, 20, 30%, that 10 grand is 200, $300,000 a year worth of income. That's how you turn a 10 grand investment into a very high paying salary. Now, it's tantalizing to think of just doing it one time, but after years and you have a diversified portfolio, the odds are more than one of those types of results can be achieved. And that's a reasonable statement. We're just talking about what is reasonable, what is rational, what are the odds. And you want to merely skew the odds into your favor. And you do that using these types of perspectives. Buy at a discount, don't chase the premium. If the hot bowl of money is somewhere, it's probably going to move somewhere else. Where is it going to move? What types of businesses are likely to be multiples into the future? And the perspective that I offered to folks was that these are the same fundamental VE33 technologies where the incentives are aligned differently than traditional voter escrow systems. They are all derivatives of solidly. They have different user interfaces. Some have shortcomings, some don't. Great. The whole point is it catches a bid, and all of a sudden the team has different motivations and different incentives to do different degrees of work and focus on different things and expand the team to have more capacity to to make improvements to needed parts of the product. So Aerodrome is on base with about 1.4 bill right now. Hot ball of money was there. Base is at over a half a bill market cap. Optimism, I believe, has 800 mil or so. We could look at the data. Optimism is a meaningful and systemically important market, an L2 of Ethereum mainnet. Optimism has the super chain narrative. Arbitrum has the orbit narrative. Base is connected with Coinbase. Arbitrum is connected with Robinhood. So as you can see, all of these networks are interweaving with one another. At some point, I expect meta chains, and then really the whole omni-chain conversation comes into the picture. So generally, my inspection is that Arbitrum has significantly more dollars than these two other chains that are referenced, Base and Optimism. and things are bought with dollars. And this needs to be considerate of what I define as money versus what I define as currency. And that's a whole conversation. I don't need to digress too much into that. But generally, when I look at markets, I don't really care about TVL. I care about dollars. Because in the end, that's the most important thing. I define it as the most important thing. I don't need someone else to define it another way. That's the whole point of a conversation. But fortunately, for this stream, this isn't a conversation, this is a monologue. So I'm just speaking my definition of these attributes of markets. So I see dollars as the most important inspection of a market. How many dollars are there? Either exogenous inflow or endogenously created using collateral, using various assets with degrees of moneyness. Ethereum. ARB, OP, assets with varying degrees of moneyness, deposited into a credit facility to print stablecoins. That expands dollar supply from within the system. Dollar supply expands from within the system. Dollars flow in from out of the system. What do we do with dollars? We buy things. The more dollars in a system, the more things have the potential to be bought. It's a simple observation. So I think Arbitrum has been off the radar just like mainnet. Everything has been underperforming compared to Solana and Base because the hot ball of money didn't get to those networks, get anywhere else. And that's just obvious in what assets have been experiencing, what kind of price action. There's been a lot of meme coins, but bear in mind there's been a great repricing of DeFi. Everything was below the high time frame moving averages, monthly or 3-month time weighted average price. Everything dipped below. Everything is repriced, shot past the time weighted average price for the most part, and is now retesting, and we get to see the change in direction. The reason people doubt is because these changes in direction take time, and we're literally 4 months into 2024. And folks would say, yeah, that's 4 months. That's, 150 days, 120 days, the beginning of April. And I would say that's one candle. That's one 3-month candle. Nothing has occurred yet in 2024. We haven't seen anything yet in 2024. What we've seen is merely a foreshadow of activity. What we've seen is merely the start of the trend shift. It's just the start. These changes in macroeconomic dollar flows, which uh, have a way of rolling over into crypto markets, take months and months and months to play out, to such a degree that you can have almost 6-month candle inspections to get a sense of where things are heading over the next 1, 2, 3 years. Anywho, so Arbitrum has significantly underperformed Solana and Base, and Optimism just as much as Arbitrum has underperformed. Yet we have a technological comparability from a functionality standpoint, from a B2B product functionality standpoint. And in that regard, I see comps. Comps are typically looked at from a real estate perspective, but they're also looked at from a business perspective, especially when you can reduce things to stuff like price to earnings. And that's the reason P&E is used in traditional financial products, to get that uh, point of comparison between businesses that are comparable, to get a sense if one is at a premium or one is at a discount. And in this regard, the discount to me is obvious. And it was much more obvious when Ramsey's was at $900,000 market cap. So it was just screamed that mispricing and that discount. And if the hot ball of money moves to Arbitrum, the discount becomes a premium. Now, this is one position. And the management of a portfolio is not just concentration into one position. You size the positions accordingly. And you have to do this and diversify amongst many different things. And that contributes to what hopefully is a healthy portfolio that is able to capture that hot ball of money rotation, the froth in markets vis-a-vis revenues. And you have to reprogram your mental state to be able to traverse the volatility because that'll drive you nuts. Oh, the market's hot one day, the market's not one day. Geopolitics is going to come crashing down. I mean, look, it is. It's pretty stark reality what's going on from a nation state conflict standpoint. And it's pretty complicated what's going on economically in China and Japan. Don't be afraid. It's not about being afraid. It's about understanding is how you alleviate being afraid, understanding the mechanics, the causality. This happens, it causes this, it causes this, it causes this, and that's called knock-on effects. And the better you understand these things, you could say, all right, if the dollar is ripping, markets are going to come down. So what's the structure of the dollar? And on the monthly, you're going to drive yourself nuts because it's been up only since 2008. Yet we've had two crypto bull markets, quote unquote. And one of the statements I make, and I will continue to make, is for the world to continue in the status quo uh, way we understand it, the dollar has to come down. It cannot keep going up. We will that will lead to significant um, anomalies occurring in the global financial tapestry. Volatility, disruption in capital flows, disruptions in financial infrastructure. So it should come down because nation states collude with one another, and forex is a relative game, and that's why they talk about the interest rate cycle. And you could look at data where 60% of the world's central banks are cutting, and then it cycles, and everyone's tightening, and everyone's cutting, and just look at the chart. It's the chart data. So that's what Mike Howell does from a liquidity inspection, as he calls it, to see whether if everyone's cutting, clearly the entire world is supported with ample liquidity. There's going to be extra capital. Extra capital has a way to bleed over from markets to markets. Why does capital bleed over from markets to markets? Underperformance reallocates to outperformance. Things that are going down reallocate to things that are going up. It's a pretty simple causality to understand in that regard. The bad guys in the house. Good morning, Cap. Happy Friday. Much a pleasure. Snoke. Good afternoon from Europe, Mr. Captain. Europe in the house. Very nice. I got to make my way to Greece sooner or later. Iden, good morning. D advisor in the house. Good morning. Hello, Cap. Good morning, Lucian. Uh, Trantaloid random, but have you ever looked into the moon cycle indicator that they have on TradingView? Yeah. Uh, eclipse, that gets very metaphysical and could be interesting. It's not something that I very strongly subscribe to. I'm more into very concrete quantitative data. But I see and have a very open mind to metaphysical concepts. And the last thing I think is we understand reality and frankly humanity in entirety. So I could appreciate that those types of thoughts by many people. I saw Mert talking about congestion issues on Solana. Not sure the details. How does a chain balance cheap transaction directly leading to ease of spamming the network? Ho ho! Welcome to why there's so many chains and why there will be so many more chains. And all of this is experimentation. Folks, especially younger, inexperienced folks, don't see that long-term perspective and technological evolution thinking in terms of what, like the evolution of uh, TVs over the last 10 years or computers over the last 10 years, and they can't look forward 10 years into this tech stack. This tech stack just started. There was nothing prior to 2020 and barely rudimentary systems in 2019. Digest that. This is just beginning. In 10 years, it will be a very, very different landscape. And the way I inspect that reality is that plenty of things have been created thus far that are consistent with infrastructure, financial infrastructure. And I define these markets as emerging markets akin to nation state emerging markets. Maybe they're cloud emerging markets, how people used to store data on their local machine and then they started storing it in the cloud. So this is an evolution, for argument's sake, of nation states into the cloud. Not in entirety. There's a physical aspect to nation states, obviously the population, manufacturing, consumption, so on and so forth. But these are financial emerging markets. It is it is that. There's no better way to possibly describe it relative to everything that we know from the real world. It's a financial emerging market, but it's not just a financial emerging market, it's a financial emerging market of emerging markets. So what we have is just an extraordinary, uh, exponential growth of technological, financial technology infrastructure, fintech infrastructure, because we're dealing with credit, foreign exchange, and derivatives that span the world, of no nation, accessible to all nations, and it's not just one market, it's a market of markets. So in that regard, this has never occurred before in history, where you could get credit from any country, in any country, from these markets. But when you're getting the credit from these markets, you're not getting it from any nation state or any business in any specific nation state. It's why probably the best description is a cloud nation state, a cloud emerging market. And that's just extraordinary. Revolutionary is probably applicable from a financial perspective. It changes the equation to have a market that's, outside the scope. I don't want to say outside the jurisdiction because that's literally what every damn country's fighting over, but it's technologically outside of any specific nation state. It is moving capital into these markets is akin to moving money out of a country into another country across a border. It's a different landscape. A transfer was involved, a transfer from to where? And it certainly isn't a location. You're not transferring money to a location. You're transferring money to this conceptual place, this conceptual destination. So these very philosophical types of conversations seem quite applicable to try and understand what the hell is going on here. Lucian, it's not the indicator, it's the ability to see patterns. Any indicator given enough time can be useful, even something as pseudoscientific as astrology. Yes, that is actually a wonderful statement. Well, that also reduces to correlation. And that's literally what we look to in financial markets. We look to see, when you say patterns, we see the correlation in patterns between different components of a market. So why doesn't that just expand to, physical phenomena? And that's what, like astrology to some degree, or just actually the scientific astronomy even maybe, because there are forces at play. There's just gravity and particle emissions and which have countless knock-on effects. So I see your observation as quite reasonable, and you could probably have an entire conversation contemplating that, the correlation of, of of markets and trends and patterns across different systems. Why not? The last thing I want to do is discount things. discount the reality of things. Thank you. Have a wonderful weekend. Buen fin de semana. Te veo. Um, Fair point. Although, ask workers at the ER or 911 dispatch about full moons. The term lunatic and lunacy are derived of an as of yet unexplained correlation. We are 70% water and the moon moves ocean. I think those are very reasonable statements. And but it's a great statement to just remember the things that we talk about, always to have an open mind, an expansive perspective to try and understand things, especially new things, in terms of something else, because that's how humans understand things. The original, I always tell this to, as a joke, especially when my kids were younger, how did the original cavemen teach? Uh, Bang rock. You, you, you bang rock. Oh shit, make fire. Oh, you make fire. Okay. So the correlation between banging the rock and making fire, and then it made sense. Correlation. And then that's a very powerful observation. Is there a V33 exchange on or set to launch on Solana? Yeah. Did Pepper? I don't think PepperDex did V33. I think they did voter escrow. Um, I think it would be a great addition to Solana. Um, this the Federation, the Hero Network is a serious federation. It's probably the federation with the greatest depth and the greatest satellite protocols, greatest number of satellite protocols as compared to the Curve Federation. It's designed to be a root liquidity provider. That's a big deal. Um, I don't think there's a specific V33 implementation, to my knowledge. In any regard, with the transaction load, I expect the hot ball of money to rotate off Solana for a bit. Let's take a look at Solana. Peaked at like 220 down to 175. You know, it's definitely at a premium, and a premium will continue to be a premium, can continue to be a premium, but there's also plenty of reasons that you have cyclicality. I mean, come on, just retrace to the 10 SMA in the 3 month, and you're at 72, and that's a massive number. 72 is 9x. It was at $8. It was at $8, and look at the candles. Merely from a candle perspective, it's like, all right, fine, it goes to 72. So I just don't chase the hype. You want to follow the hot ball of money, but you need to follow it when it's just starting, which means you kind of want to be there before it starts, which means I probably don't even want to chase the damn hype, and I just want to be diversified and have exposure to markets. So if the hot ball of money rotates to where I have exposure, great. And that's really where I'm at with regard to navigating markets. I don't even chase the damn hot ball of money. I have no expectation for outperformance, and I think in terms of exposure. And to get exposure, I need to own something that I think will be an established business in the future. I want something that is at a discount that other people don't see. And I want something that has maybe comps on other networks that are at a significantly greater premium. So the discount becomes a premium. That's what I want to buy. And if I buy a diversified supply of discounts, the odds are some of them, hopefully all of them, attain a premium, which means something that's cheap becomes very expensive. And then it cycles up and down, and then on a secular trend, higher lows and higher highs, and great. I bought it at a discount, and I'll check back, and it'll be productive now. And that's the most important thing. If you can find something that's productive now, and sure, you can speculate to the degree that it'll be productive in the future. I mean, look at Frax at this point. It's cranking out 13%. VEFXS now cranks out 13%. That's over 2 times the risk-free rate of return in exchange for a fair amount of volatility. That's the 3-month chart. Okay, I think 13% is quite considerable. considering it could go up. If these crypto markets attain $1 trillion, that would go up, and so would the value of the principal. So that's exactly what I want to have exposure to, and that's what I thought back in the day as well in 2021, give or take, when they launched. President Sir Joe is in the house. For everyone from YouTube as well as X, throw your comments in the chat, and I will answer anything that you're talking about. I love to talk Q&A. You know the deal. Cap, can you talk about how Layer 0 and Tapioca DAO will hopefully affect how we interact with the different chains and L2s? Yes. Layer 0 facilitates a concept such called omni-chain. I think Tapioca may be the first, at least attempt, at a great expression of the concept of omni-chain. Now, clearly, we have the concept of cross-chain, where you could transfer tokens to another chain and have some sort of tokenized representation. But the future is omni-chain, where it exists on all chains. And there's this seamless interaction or seamless flow of liquidity from market to market. And that is a decent speculation. And you size the speculation accordingly. And I think it's just the start. And especially if it proves itself. It starts a trend. And then other protocols duplicate. And duplication is the greatest form of flattery. And duplication creates a robust market. Not necessarily competition, because the first mover always retains a first mover advantage, but duplication further enriches the market, encourages financial activity. When is capital going to rotate back to Ethereum because it's consistently bleeding against BTC? Price of Ethereum is a complicated one. I see Bitcoin, Ethereum, gas tokens broadly, anything that can be sold as a form of cash. I'm not too interested in Ethereum outperformance. I'm certainly not too interested in Bitcoin outperformance with regard to investments. With regard to the cash position, oh, sure. When you get your cash, there's a time for it to be in Bitcoin denomination or Ethereum denomination if you want. At some point, Ethereum will run multiples, and there's a good argument that maybe it doesn't outperform Bitcoin, even though it's deflationary, which would be kind of weird. But these are all considerations, and this all contributes to the composition of your cash position, cash component of the portfolio, and how you rotate capital in the cash component, cash part of your portfolio. But what is the purpose of cash? The purpose of cash is for spending, to buy things, to buy investments. And investments I define as something that's a business, that's productive, that produces income. The income you accumulate. Great. Accumulate a Bitcoin denominated. I think that's a great idea. I agree in all regard with regard to Bitcoin maximalism. And I think it's a great cash. And it has a great degree of moneyness. But I also think investment in fintech business to produce cash flow is very important. Cash flow is a separate concept from cash management or money management and savings. Because at some point, work is trading time for money. But if you own businesses, that's how you get your income. So that I think is an important goal, to get income, not just saving and accumulating. You want to invest as well. I don't define Bitcoin as an investment. I define it as a cash, useful for savings. Periodically and cyclically, you need to rotate denomination to the outperforming cash denomination, in which case the dollar outperforms cyclically. It's not outperforming now, but it will. And just respect that cycle. It's a reality of humanity. Just reality, not even considering humanity, is all about cyclicality. I would like it. At some point it will rotate to mainnet. The hotball will rotate to all networks. Hotball rotates from underperformance to outperformance. And if something is lagging and is at a discount, at some point it gets monetized. So at some point, what has underperformed will outperform. Cyclically. That's the way existence works. Sora entry, or vaporware at this point. Sora. Surely it's interesting. It's not mainstream. If anything, you're talking like you got to think time horizons. Like when could something be significant? Generally speaking, Atom was off to a hot start. Cosmos hubs, big deal. That was airdrop fueled. Clearly, all the froth has come out of that market thus far. Rotated Solana, rotated to base, so on and so forth. I think I think in terms of hierarchy, and clearly Ethereum was the center of attention in 21, and then towards the end of 21, the L2s came online, and now it's a very different landscape. Now you can literally bridge seamlessly across the L2s. You can just literally bridge to Cosmos hubs for that matter, and Solana to mainnet. It's absolutely astounding what you can do with capital nowadays. You couldn't move your capital around back in 2021. There was no such thing as getting your capital to these other chains. It was everything siloed. But now the frictions have been reduced and these bridges are available, and that's very meaningful. So that's why like layer zero and omni-chain concepts is such a further extension of how incredible and how big it is to be able to move capital seamlessly across markets. Um, so I expect that capital to rotate to main. It'll rotate everywhere. It's just what will happen because that's natural law. Does Tapioca change anything regarding what you mentioned about Omnichain earlier? Yeah, Tapioca is probably the strongest expression of Omnichain. Right now, there's a great deal of cross-chain, and it's like seamless, like MIM and beaming and seamless cross-chain, and get your MIM all over the place, and that's great. Very high opinion of what they've built and done. Um, and that's the case for a lot of assets. Maybe not to the same degree, but it's a lot of narrative. But OmniChain's a different level of realization of the concept of assets being everywhere all at once. It's kind of like quantum superpositioning. It's just everywhere. It's a big deal. So I'm very curious to see what happens. Hello, Diego's in the house. Tape Pusher, the majority of crypto Twitter is pretty disgusting right now, isn't it? I feel sorry for newcomers falling for memes, token, promo. Listen, the few make money with memes. Thousands of people are making millions, and it's okay, and I can understand the reality of impoverishment and desperation and gambling and you could get those 10, 100x's from small cap memes that are starting to catch a bid. I see a lot of folks that do fractals and try and do comps with regard to stuff compared to the Pepe or the Doge, the early days, and that cyclicality is there. So the reality is few memes become entrenched in society, few memes become culturally significant, and that's not really a bet that can be quantitative. It's very speculative, which are going to be the socially accepted memes, and that's it's a whether that's reasonable behavior or not. I don't know. Is that for parents to define and how what they want for their children and what kind of speculations they take, what kind of gambling and chances they take? And I like to be more quantitative and use data to make very reasonable decisions and have very reasonable expectations. You saved up 50 grand, 100 grand in 2019, and you turn that into $1 million, and that carries over till now, and that $1 million turns into $10 million in 2026. That changes everything. But that's 8 years, 8, 10 years worth of an investor's time horizon. So I think that those are very reasonable time horizons to think from an investor standpoint because they're much more sustainable, much healthier, and much less emotionally taxing. And that's important. It's so important to teach our kids to have mental stability and health and patience and be considerate That this is a it becomes a very social question of who we are, not just as a society, but what we want for the next generation from a parent's perspective. Tape pusher, it's pretty gross. The word is degenerate, and it's going to go up. It looks exactly like this. It's going to do exactly what this other coin did. It's going to be accepted socially. They don't say that, but obviously I've been telling you that that's what it all reduces to. Um, oh, this guy turned $1,000 into a million, 10 million, 20 million. Okay, that's great. So you play the lotto and you get $2 lotto tickets and you come out with 100 mil. If you put 10,000 social media posts that a guy turned $2 into 100 mil, everyone be playing the lotto. And frankly, if you look at the lotto statistics, everyone is playing the lotto. Everyone's gone full degen in lotto mode, all the old people and boomers that know nothing of these crypto markets. Because if they were younger, they'd be doing the meme coins. And that's what the young kids are doing. So it's equivalent to the psychology of the lotto ticket. And that's, probably not the best expression of a healthy society. But who am I to judge? I'm here to tell my story. I'm here to try and convey rationality, try and invoke stability in people engaging with these markets. I think these are the best investable markets of all markets. The asymmetry here is extraordinary. That's probably a bad thing because capital investment is about opportunity, and malinvestment diminishes the capacity for productive enterprise. And the whole financial infrastructure of the planet is plagued with malinvestment, where a good business that does something good for the population, does some quality manufacturing, and employs humans to let people live, might not be a good investment. And frankly, that's a shame and a tragedy. But in the end, I follow the rules that I understand. It's not personal, it's business. Uh, and my pinned tweet, fuck you, pay me, is my mantra. Pay me. If I'm going to invest, pay me. It is what it is. Pay me as much as you possibly can if you want my money. And if you can't pay me, I'm not going to give you my money. I'm just taking it to the extreme of what it means to be an investor that respects yourself. You don't want to give someone a premium. You go to buy a car. Hey, here's an extra 10 grand. I know you could give me a discount on the car, but I'm going to give you an extra 10 grand. Fuck no! Nobody's doing that. Nobody in their right mind would do that. So why do you do that with investments? Why do people do that? Well, I'm going to pay a premium. No, it's the same exact thing. It's a purchase of something with an expected return. You're buying a car, the expected return, expecting to consume the car and maybe retain some value. Why pay a premium? With these assets, sure, you're expecting a return, and maybe the calculation's a little different. You're expecting appreciation rather than depreciation with the vehicle, and you hope that the appreciation accounts for the premium you're paying. Here's the extra 10 grand. Don't worry about it. I expect the performance to go above and beyond that premium I'm paying. Then I just pay a discount, and then you get the premium, and then it appreciates, and then you get more, and then there's countless, endless assets, and you can't buy a lot of them. So you need to define the rules that tell you what you can't buy. Stop buying things at a premium. And this is clearly a subset, a microcosm of the market. So everyone's going to be buying shit at a premium, and that's exactly why you end up buying something at a discount, and it goes to the moon because all the dum dums out there buy it at a premium. Who the hell bought Aerodrome at $2? It was 8 cents. Is that a premium price right now or a discount? Wish I owned it at 8 cents. The fact that I can't own it at 8 cents means I'm probably not going to buy it. And folks have said it's arrogant to not pay someone 10x on the money, and I'm like, I don't give a fuck. I'm not buying. I'm not paying someone 10x on the money. I don't need the exposure. My portfolio has done extraordinary over the last 5 years by following my rules, and I will continue to follow my rules. And my expectations for the top of this market, which hasn't started yet, will be the culmination of 8 years of investment work. And my expectations are very, very reasonable. And I expect, the odds are, my expectations will be blown past in a disgusting way like these crypto markets do. And then it will fall down to probably my expectations. Because you blow past, you deviate to the upside, you deviate to the downside, and you have the trend of higher lows and higher highs. And that's it. And in that regard, I'm going to let time do the work. And heading into 2030, it'll just get better and better. IMDC, hey, how are you? Become more comfortable buying older projects via DCA. Older projects are very meaningful, time-tested, mother-approved, established. Some have massive treasuries like Golem. These are big deals, especially shit from 2017 era that have large treasuries. So that's an interesting statement. Things that you can add to that type of conversation with yourself. How much is it paying? What's the potential appreciation? What's your expectation? You want to meet your expectations. If you don't meet your expectations, you will be disappointed. Don't be disappointed. Buy a discount. Don't overpay for shit. Hope that helps. Would you apply this same premium logic to entering Ethereum or Bitcoin now? But I don't define Ethereum and Bitcoin as an investment. I define it as a cash. Therefore, I want to accumulate Bitcoin, probably more so than Ethereum, now. And clearly that tune's going to change if Ethereum rips 10, 15, 20x as compared to Bitcoin. But that's the whole point. The way you operate depends on market conditions. You want to accumulate things that are outperforming rather than underperforming. So your income gets saved in varying denominations. The go-to denominations are Bitcoin, Ethereum, and dollars. And you want to rotate between those three depending on market conditions. And in that regard, you better be following Forex markets, the DXY, and obviously the Bitcoin chart and Ethereum chart are denominated in dollars. So if they're going down, you buy dollars. If they're going up, you buy Bitcoin and Ethereum. It's a pretty simple rotation. The problem is you got to zoom out and look at those monthly charts and those 3-month charts. And you don't need to catch bottoms or tops. They're not investments. If you got $100, $200, and you're DCAing, that's a whole different consideration. You can turn off your brain and just DCA, 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 and that's cool. You're working a job and using income from your job to DCA. All right, great. If someone subscribes to that path and route for themselves, stick to it. Be consistent. Me, I want to own businesses. I want to be an entrepreneur. And I happen to do it in an industry, in a sector, in a field, in a market that most people don't really look to for businesses. So in that regard, it's an entrepreneurial venture. Me defining the space as I see it. I hope that helps. It's imperative to define these things. And, it'll cause a lot of confusion, and it causes a lot of confusion when I'm talking to folks on social media because they're like, the TVL of a chain, that's what matters. I'm like, no, this is dollars, because in the end, if 100% of the assets on a chain are sold for dollars, the maximum of a value you can get is the total dollars available. And I define dollars as being the most important thing, because if you want to put money on a debit card, you need dollars. You got to transfer USDC. Sometimes you could transfer USDT. You could do GUSD to Gemini. You could do PYUSD to PayPal. But it's a dollar. If you transfer Ethereum to one of these cards, they're selling them for dollars. Not necessarily USD, probably to a USDC, because the USDC is redeemable for $1. The only way they could sell them for dollars is if they're like an exchange and they have dollar supply, dollar markets. But if you look at like a lot of the exchanges, look at Binance, Tether denominated, and you can see that in the charts. Look at the charts. These are US dollar denominated, but Tether denominated. But you can look at a chart. It depends on the pairs that are available. And I like to inspect these markets in terms of total dollar supply because that means something. That means the persons with dollars are comfortable. They have a relative perceived degree of risk that is comfortable to move that amount of dollars. And to me, that's meaningful. Probably the most meaningful expression that you could observe in a market. Anywho, I hope that helps. We've looked at a lot of stuff today. I appreciate you guys listening to my ranting and raving as we're going through these last couple of days, heading into what looks like increased geopolitical risk, increased financial volatility. But I continue to be very comfortable thinking that these are interesting markets to such a degree. I put some capital over on Linnea to take some of the Nile. Small position compared to like the Ramses position, but Linnea is also a micro market compared to Arbitrum. It's like $14 million on the entire market compared to 3.4 billion on Arbitrum. So I don't necessarily want to move that much capital. So that was my general thought. Obviously, Nile is related to Ramses and Cleopatra and Ra and Fraxtal, so it's part of their quote unquote kingdom. Generally, my sentiment that there's things that Cleopatra is interesting too, and there's plenty of narratives. And the Phantom narrative is getting hot. I think the Andre comeback arc is going to be very interesting. And doesn't USDC.E launch today on Phantom? So I think Andre is clearly hated. He lost a lot of people money, but I think his ideas were brilliant and are brilliant. And he built Yearn. He built Phantom. He built solidly. And Yearn is quite an established, successful, cash flow positive business. Phantom is a hell of a technology and a functional chain. And solidly exchanges are at the top of the volume charts on basically all chains. So what he did across the board was extraordinary as a contributor to the space. Hope that helps. Rotate into outperforming cash, buy at a premium kind of, but mispriced investments, buy at a discount. Cash investments are the primary components of a portfolio. Buy it doesn't matter. Cash is cash. It's meant to be rotated. Investments, I very concretely define as not something that you cyclically exit. Investments are something to own, something to be proud of, that you bought because you saw something that everyone else didn't. And that's the last thing I would ever want to exit. So that's a part of the reason why I love locked positions, because that only contributes technologically to my capacity to not rotate. Can't rotate. So that my 2 cents. Hope it helps everyone. You're very welcome, Tate Pusher. It's not my ideas are not the end all be all of ideas. This is a monologue, and this is me. And if folks wanted conversations, then you have a conversation of ideas. And but this is my ideas. I will catch you guys next week. Enjoy the weekend. Thank you for sticking with me to the end. Friday, April 5th at 12:44 p.m. Link on X for the most rational community in the entire crypto space. I will catch you guys and gals next time. Peace.